why banks are saying no to home loans. Okay, the top 5 reasons why banks are declining home loans. All right, let's get right into it. By the way, guys, the first thing is going to be number one. Is going to be low credit score. A lot of people are not meeting the credit score requirements for home ownership. Some people don't even know what those requirements are. Okay, and so when you're looking for a home loan, the lower score that you need to qualify is a 580. Okay, but sometimes people will see a credit score on their credit card. They'll see that it's like 650, 700, whatever, but that's not their mortgage score. Okay. In order for you all to see your mortgage scores, it's two ways to see your mortgage scores. Okay. These are the top two ways. Write this down. Way number one is going to be myfico.com. That's myfico.com. This is going to show you your mortgage scores. Okay. You'd be surprised. 90% of mortgage lenders don't even know this. Okay. And when you do this, you're able to see the exact same score that the banks are going to see. They're going to drop the highest, they're going to drop the lowest, and whichever score is in the middle is going to be your middle score. Okay. We're going to go cover a lot more of this on Thursday. Okay. So make sure you guys go ahead and register for that. If you guys are on Instagram, make sure you guys comment the word keys. That's KEYS. All right. And then everyone else, you guys can go ahead and click on the link inside the description below. All right. But that's what it's going to be. But a poor credit score. Oh, you guys can even see this. All right. Let me go ahead and pull this up. My bad. All right. So you guys can actually put a visual to it. But a poor credit score indicates to lenders that you may be a high risk borrower. Okay. And you are essentially, that's going to lead to a denial of your mortgage application. Okay. So that's going to be, of course, having a low credit score. Happens all the time. People think that their score is there. It's not. They apply, they get denied. And that's the reason why, guys. Okay. Next, by the way, guys, this is the actual event here. So if you guys are watching this on YouTube, you guys can scan this QR code. It's going to take you directly to the free webinar. It's not a lot of seats left. I should have been updated this. This is not 44 seats left. I got to get y'all an accurate number. But it's like less than 20 for sure. But go ahead and scan that QR code, get access. This is going to be tomorrow evening, okay, 9 p.m. via Zoom. All right. Either way, number two is going to be insufficient income. Okay. If your income is too low to support the mortgage payments, or if your debt to income ratio is too high, the bank may decline the application. Okay. So again, the bank may decline the application if that's the case. Okay. Some of you all are not making enough money compared to the debts that you have. Okay. So when you're in this situation, one of two things have to happen. Right now, we're focused on income. So if your income's not enough, you have to increase your income. You may have to add someone to the loan application. Okay. A lot of lenders are okay now with 3 people being on a application. 3 people being on an application. Okay. So that's huge. You most definitely want to make sure that you're not missing out on that information. All right. Next is unstable employment history. Unstable employment history. Banks prefer that borrowers with a stable income. I'm sorry. Banks prefer borrowers with a stable employment history, guys. Okay. If you've recently changed jobs or you have gaps in your employment status, this can result in denial. You from job to job, you're here for this month, you're here for a short period of time, this month. Listen, you got to make sure you have everything in place. If you don't have these things in place, it's not going to work out. I'm telling you this, okay? And so now we're not going to spend too much time on this because obviously I got to save some stuff for tomorrow. But long story short is a lot of times people think you got to be on your job for 2 years. You don't have to be on your job for 2 years. The biggest thing is how if you were essentially at the current job, how long you've been at your current job, and if there's a job gap before this current job. Okay, the longer you've been at your job, the better. But if you got multiple jobs and you've been at them for a very short period of time, that's a shaky application. Okay, that is most definitely a shaky application. All right. By the way, guys, if you haven't done so already, make sure you guys like, share, subscribe, and follow. That's everything, right? All right. Next is going to be your debt levels. Okay. High debt levels. If you have a significant existing debt, the bank may be concerned about your ability to manage additional mortgage payments. Okay, which is going to lead to a rejection. Okay, so you got to make sure you are good to go, especially as you're going through this entire process. Okay. So we talked about the first one that was raising your income. If you can't raise your income, or if there's some things that you're not in position to do with your income, then what's the other way to do it? The other way around this would be, of course, reducing your debts, paying down credit cards, paying off certain things. Okay. Now, before you pay off stuff, before you go crazy paying off stuff, if you don't pay stuff in the right order, then what can happen is it could hurt your chances of actually getting approved for the loan in general. So keep that in mind as well. Okay. So you got to be careful. I've seen people pay off like an auto loan, and they threw $5,000 at it, $8,000 at it, $10,000 at it, and then now their down payment money is gone, for example, or they could have used that for something else. So here, make sure you talk to a mortgage lender or a real estate agent first before you start just paying off stuff. Okay, we're going to talk about that tomorrow, like what stuff you may need to pay off and things of that sort. But again, you got to make sure before you pay anything off, you got to get an opinion on this stuff. A lot of you all are just throwing jello on the wall to see what sticks, not just with your credit, but in general. And you're like, okay, I thought this was going to work out. Get confirmation, get someone's a professional opinion. Okay. Next is going to be an inadequate down payment or savings. Now, unfortunately, some of these banks, they want you to have a certain amount of what they call reserves. So now a reserve is a monthly mortgage payment. Some of you all don't have to worry about this. If you have a strong profile, what's a strong profile? A strong profile is a credit score that's well over 680, 720. You've been on your job for, more than 2 years. Now, again, just because if you don't have to have these things, but the stronger the profile, the easier it's going to be to get you guys approved, to be totally honest with you. Okay. So you got to keep that in mind as you're going through the process in general. Okay. But again, if your down payment is too small, especially if it falls below the lender's minimum requirement, your mortgage application may be denied. Okay. Let me go and move this down. I don't know if you guys can see this on YouTube. Let me go ahead and, or probably Facebook, everything. So give me a second. I'm going to move this so you guys can see what's at the bottom. But some lenders may require a certain amount of reserves or savings we just talked about. So let's say, for example, if the monthly mortgage payment is 1,500, because of your profile, the bank may want to see 1 to 2 to 3 months of that plus your closing costs. So if the monthly mortgage payment is 1,500 and they want to see 3 months of that, they want to see 3 months reserves. That's 1,500 times three. They want to see that in a bank account. They want to see that in a savings account. They want to see that in an investment account. Some of it don't have to be liquid. Some lenders want you to have liquid. Some don't care what account it's in. They just want to make sure that if things go south and you have to pay your mortgage, they want to make sure that you have somewhere to go to get this money. That's the biggest thing. They want to make sure that you got somewhere to go to get this money. Okay. So you most definitely want to make sure that you have everything in place as you guys are going through this. Listen, these are the reasons why banks are saying no to people's home loans. These are the top 5 reasons. You got to have these things in order unless you want to get your application denied. Okay. We're going to dive much deeper into this on tomorrow. Okay. I know you guys got some questions. Listen, well, we won't be able to get to questions tonight, but listen, you got to be inside the webinar tomorrow. Okay. So here, I'm going to go ahead and put this up on the screen so you guys can actually see this. If you guys have not yet registered, go ahead and do so. Okay. So if you guys are watching this on Facebook, YouTube, whatever, you guys can scan that QR code or click the link inside of the description, and you guys can actually registered. It is. If you guys are on Instagram, all you got to do is just go ahead and then comment the word keys to get access to the free webinar on tomorrow. And TikTok, you guys just got to go to park850.com. That's PARK850.com. Okay. And that way you guys can go in and get and join and be a part of the webinar on tomorrow, 100% free. We're going to be answering questions and everything. All right. So let's jump into the comments real quick. I know you guys, if you guys do have some questions and such, be sure to put them inside the comments. I'm going to go into a couple things. Let me see what I can go around here. Grinding for the bag says, my mortgage score on FICO is 659, 610, 630. That's great. Been on the same job going on 4 years. Grinding, just so you know, you with those credit scores, you right now, you qualify for homeownership. All right. You qualify for homeownership. So again, that's a 630 middle score, sir. So whenever you ready, just so you know, whenever you ready, okay? All right. So Blind Jedi Master says, would you say a home loan is harder to get than credit cards? I'm gonna be honest with you. Getting a home loan is easier than getting a credit card. Matter of fact, I'm gonna put this down. That's gonna be the title for a video tomorrow. Getting a home loan is easier than getting a credit card all day long, because with a credit card, you never know why they denied you. They just give you some BS about, whatever the thought may be at that time. But with a home loan, it's really simple. It's very simple. If you meet the qualifications, you will qualify for a home. You will get approved for that home. It's not I'm telling you, as long as you meet the qualifications, I know a home is big and it's a lot of money and all that stuff. But to be totally honest with you, the banks have made this way easier. Getting a home loan is one of the easiest things that you can get. Okay. Because think about it. You can get a whole entire house, hundreds of thousands of dollars with a 580 credit score. You cannot get approved for some credit cards with the 580 credit score. They'll kick you out the dealership if your credit is around 580 or so, depending on what type of car you're trying to get. But if you're trying to get a house, you most definitely can get a house. I'm telling y'all, I'm going to show you guys everything on tomorrow. This is just all the side notes. Okay. I'm just breaking down all these small pieces of home ownership. All right. But y'all not ready for tomorrow. I promise you that. So Grinding says, I've never purchased a house or ever went through the process. It's time, Grinding. You already listen. If you're watching this, I don't care where you're watching this from. If you're watching this and you're paying rent, there's a 90% chance that you can live on that same block or within a quarter mile of where you're living at right now and pay the same amount of money to live within a quarter mile. Okay, that's most areas right now. I'm telling you. All right. Grinder says, I'll be there for sure. Kasha says, hey, Calvin, got a crazy Navy Fed story. I signed up for a credit card, had an extended bonus sign up, first intro bonus 0% for 6 months, and then 0.99 for 15 months. And now they don't want to honor it. Woo, man. I heard about that. I think someone just did a video about that as well, too. But either way, we're going to talk about we here for home ownership tonight, but that is most definitely crazy for sure. Yes, we most definitely got to hear about that, because I've been hearing a lot of, not just Navy Fed, but a lot of credit card companies in general have not been honoring a lot of their interest rates and things of that sort. So we're gonna see how all this pans out. But either way, guys, make sure you guys go ahead and here I'm gonna put this up for you guys real quick. Is that it? Okay, there we go. So I got the QR code right there. Okay. Matter of fact, I'm gonna put it up right there. All right. So if you guys again go ahead and get registered for that.